Liquidity zones may move and change over time. Today we will discuss the concept of dynamic liquidity zones in trading. I will explain the difference between static and dynamic liquidity zones. You will learn how to identify and use them properly. Take notes and let's get started. Let's start by discussing static liquidity zones. Static liquidity zones are liquidity clusters that do not shift with time. Once they are identified on a price chart, they remain fixed no matter when the price returns to them. That's an example of a static liquidity supply zone on a pound-dollar pair. As you can see, it is a horizontal structure cluster that accumulates selling orders. We call it static because whenever the price tests it remains at the same levels. It means that if the price goes up rapidly now, this liquidity zone will be here. And if the market starts consolidating and if the price starts moving in sideways and only then tests that supply zone, it will be at the same price levels. And the time does not affect that. Learn smart money concepts trading with my book. Look inside the book on my website, the link in the description below. Now compare that to a liquidity supply zone on a euro-dollar pair. As you can see, we have a significant static horizontal supply cluster here. But this supply area is just a part of a bigger liquidity zone. We have another strong structure here. We have a strong rising trend line, and this trend line acts as a strong resistance. This trend line and this horizontal supply cluster will compose a dynamic supply zone. The upper boundary of that supply zone will be higher and higher with time. It means that if the price goes up now, the upper boundary of our liquidity supply zone will be here. But if the price starts consolidating and if we see a sideways price action first and then the price moves up, our upper boundary will be right here. So you can see that no matter how the price acts, this liquidity supply zone expands with time. So here is what exactly is a dynamic liquidity supply zone. A dynamic liquidity supply zone is a combination, a confluence of a strong trend line and the static liquidity supply zone. Such a zone will change with time. Now let's discuss static and dynamic liquidity demand zones. That is the example of a static liquidity demand zone on a euro-yen pair. It is a fixed horizontal structure cluster that accumulates buying orders. It means that whenever the price tests this zone will remain at the same levels. For example, if the price drops sharply now, this zone will be here, but if the price starts sideways price action, if the price starts consolidating, this zone will remain at the same levels. So the time does not affect that. Please check the price action on a cat Swiss pair. I spotted a significant horizontal liquidity demand cluster below current prices. But this liquidity zone is just a part of a larger dynamic liquidity demand zone. As you can see, we have a strong vertical structure, a falling trend line that acts as a support. Our dynamic demand cluster will be based on a static horizontal demand zone and this trend line. And with time, this dynamic liquidity demand zone will expand. If the price drops rapidly now, the lower boundary of our liquidity zone will be here. But if instead the market starts trading in sideways, if we see a consolidation first, then the lower boundary of this demand zone will be at lower price levels. So it will expand with time. Dynamic liquidity demand zone is a combination, a confluence of a static liquidity demand zone and a strong trend line, so that the zone would constantly change over time. Please note that depending on the positioning and the direction of a trend line, a dynamic liquidity zone can expand or contract. On a European pair, I see two significant dynamic liquidity zones. We see a contracting liquidity supply zone based on a falling trend line and a horizontal supply cluster. And we have a contracting demand zone based on a rising trend line and the horizontal static demand cluster. Both dynamic zones become smaller over time. Your ability to identify dynamic liquidity zones provides a deeper understanding of a concentration of buying and selling orders on the market. Integrate this knowledge into your analysis, and good luck to you in trading. Let me know curious in the comment section, what do you want to learn in the next videos? Learn smart money concepts trading with my book. For more info, check the link in the description below. Also traders, please watch my other videos.